Greetings, Dr. Jeffrey Scott here. This is it'll be abbreviated weekend market update for December 24th, 2023. Happy holidays to everybody out there, and a big day tomorrow with Santa coming. And the question is, will Santa keep the current rally going? The Santa Claus rally typically is the last 5 trading days of the year and the first 2 of the following year. So we would have started on Friday this past week. My email address is hgsidoc@gmail.com. I'm happy to respond whether it's email or in the remarks section of YouTube. If you are new to my channel, hit the subscribe button on YouTube, hit the alarm, and you'll find out when I post these. As always, this is for educational purposes only. I am a doctor, not a broker. That means I have plenty of licenses, but I have no licenses that will give me the right for you to listen to me for trading advice. So this is for education and not investment advice. I am independent, and trading involves risk, and you alone are solely responsible for any decisions you make. Wealth 365 is almost here. It is starting, I believe, on January 15th. It is indeed, and running through from Monday through Saturday. The 15th is Martin Luther King Day, which is a market holiday. It's always the best day to present because thousands of people attend. It's a great conference. I hope you can join us. Not sure when I'm presenting, but I've seen the roster. There's some really great speakers and new additions this year. In fact, if you have wealth charts, you've seen new additions already with some brokerage options additions and some improvement in the user interface. Start with the major markets, and you could see, or what I see here in the major markets on the week, pretty much everything is green. The dollar was down, bonds were down a bit, kind of flat, and the VIX was down on the week, which is bullish for markets. But the part that's most impressive to me is we had another week where the Russell led was up 2.3%. So we are seeing a resurgence in the broader markets, and we'll talk about that as well. But the Russell has been a laggard for quite some time. In fact, you can see the Russell is now 24.6% off its 52-week lows. If we look at the sectors, you could see mixed, but 2 of the red ones are 0, one's less than 1%. Really the only thing that was down significantly was the rate sensitive utilities. Looking at the Q-Edge tool, a couple things come to mind. This number here is 6.3% of stocks above the Bollinger Bands in the S&P 1500 is dramatically reduced from a week ago. That shows that some of the overboughtness of the market has improved. You could see in the S&P 1500, the majority of the sectors were up. And you could see here, if you look at the 5 days, all the sectors were up. In fact, over the last month, all the sectors were up. 93% of the industry groups were up over the last 5 days, and 88% of the stocks, over the last 30 days. So it's been a very bullish December. Not a surprise, as November and December are some of the most bullish times of the year. Here's the Nick Drendel spreadsheet. I like to keep this up on one of my monitors because it gives me some information. I could see that the closing range was in the middle for most of the indices. ARKK, Cathie Wood, small cap growth, really something that's in favor right now. You could see closed at the highest part of its range compared to its peers. All of the indices are above their 50 and their 200, so we're in a very bullish posture. And biotech, something that I've been very hot on for the last month or so or more, continues to do well. And you could see over the last 50 days, pretty much 2 trading months, 27%. The only thing that's exceeding biotech is home builders at 34.6%. Rates were mixed with small moves. You can see here the 10-year was down 0.69%, while the 30-year was up 0.67%. Really not big changes this past week, especially compared to the last couple of weeks. Recession in our near future, my answer is no. It's easy to say sometime there will be one, because there will be one. But even though our yield curves are inverted, I don't see evidence that there's a recession imminent. Credit risk does not show me a problem, nor does economic activity. So yes, we'll have a recession someday, but there's nothing that says it's tomorrow or next week. Breadth remains strong, so even though we've eased up on some of our overbought conditions, you can see stocks above the 200 in white line is up near the high of its range. Stocks above the 40 is up near the high of its range. The 13-week new high, new low is at a point of potential concern here up near the high. So it wouldn't surprise me to see an overbought correction or pullback coming in. But what we've seen over the last several weeks has been more about rotation rather than a sell-off in the market. Buckets, 87% of the stocks here above the midline of their Bollinger Bands. Here's where we were on the 14th, so that would have been 6 trading days ago. And notice 91% of the stocks were above their midline of their Bollinger Bands. But more importantly, 55% or so were above their Bollinger Bands. And that's eased off to 6. So we are much less overbought than we were even a week ago. Hindenburg omens, of course, you're not going to see one yet. Got to get to new highs, although we are at new highs on the Dow and the Qs. But what you can see here is 52-week new highs versus new lows, super strong on the NYSE and improved on the NASDAQ. In fact, the new lows have started to fall, which is important. Just to go back here, one of the other things I like on the NIX spreadsheet is I can see 1, 3, 6, 52-week and all-time new high, new lows. I don't know what to do with all time, so I ignore that one. But all the other time frames are green, meaning at least looking back now for quite some time, we're seeing more new highs than new lows. And that's important if you want the market to go higher. So I call this broad-based strength. This is looking at ERG, which is a combination of EPS rank plus relative strength rank plus group rank versus performance. And you take away the tail and the head because there's very few stocks there. And then you've got a pretty much flat curve at about 3%. That's a strong week any way you slice it and dice it. Hard to make a case that EPS rank or relative strength rank mattered this week. Here is a list of stock lists that I follow, and I'm looked at performance from Friday to Friday, end of day to end of day. And the point here is not how I did or anybody did. It's the fact that when everything but 2 of these lists are black, meaning positive, it was probably a good week in the market. And guess what? It was a good week in the market. Know your news and earnings. You'd expect it to be a lightweight week between Christmas and New Year's, and it is. There is some news. You got some jobless claims, which is probably the biggest, and some home stuff, and consumer confidence, and there's no major earnings. Now, note, that doesn't mean there are no earnings. It means there are no major earnings. There could still be some earnings this week that were not big enough to crack the earnings whispers list. So it is a judgment call to hold stocks over earnings. It's bad judgment to not know when your earnings dates are. It's something that I like to say. So thoughts, 8th straight week of gains ahead of the extended holiday weekend. Same factors are at play. Low rates, weak dollar compared to where it was. Oil's come down. And then you add in the FOMO of missing out on further gains, and as evidenced by the strength in the Russell 2000, probably some speculative buying. The economic data, as I showed you and more, remains consistent with that, quote, soft landing. And as I already mentioned, Friday was the beginning of the hopefully Santa Claus rally. And I remain long. This is I'm sure the same as with you and most other people you listen to. My portfolio's at pretty much at the high of the year as we've rallied for the last several weeks. I will be careful. I like ending the year near the high, which means if I take profits sooner than later, then pretty much guaranteed that will happen. But right now I think the market goes higher, so I'm going to stay long, bearing changes. And just to remind you again, starting the 15th will be the upcoming Wealth 365 event. So I mentioned before that I thought this will be an abbreviated session, and I'm just, I like buying pullbacks and uptrends. And when you've had a market that's had a big run, it's hard to find a whole lot of pullbacks. And to me, pullbacks and uptrends are lower risk opportunities. But let's take a look and see what we got here. We've got the spider on the week. You could see it opened up Monday. So here's where the prior week, let's see, this is where the prior week closed, right there. So you could see during the week we did take out the prior week lows, but we closed well off of it. Here's the highs on the week. So we closed in the upper third of the weekly market. And if you were watching the markets closely and hadn't already gone on vacation, you would have potentially would have felt some pain on Wednesday. And I don't know if this was FedEx earnings. It seems a little late in the day to happen, or it was just another Fed head talking down the market. But it almost felt like this was over on Wednesday. Wednesday night we had some good earnings, so they gapped up Thursday, gapped up again on Friday. So we finished off the highs of the week, but considerably up off the close of the prior week. Wednesday was a shot across the bow of the bulls, and we'll see if it turns out to be anything more. Now, if we look at the spider, this yellow line goes back to the all-time high. And if you look at this all-time high, we are about 6 points or 1.5%, give or take, off of all-time highs on the S&P. So it's hard to be on anything but excited about the market if you're bullish, in my opinion. If we look at the Dow has a red candle there because it closed lower on Friday than it opened, but was still up 0.15%. And the Dow's at all-time highs. Excuse me, this was the Qs, not the Dow. Same thing, at all-time highs. The diamonds over here are right off of recent all-time highs. A doji here, sort of a little consolidation, and the Dow was down 0.02 on Friday. If you look at the Russell took out this line here that was potential resistance. That's good to see. And closed up Friday, up 0.93, certainly the leader, not just on the week, but on Friday as well. If we look at UVXY on the week, you're kind of at historic low levels, and bouncing around at these low levels, a 1 or 2% gain is like 20 cents. So it's not surprising to me that we had a big move up on the week, 11%. Actually, this is the prior week, so take that back because that is not updated yet. But you could see if I just put the UVXY on the weekly, up 4%. The dollar has come off its highs, failed a retest of the 50, and is now bouncing between the 50 and 200. To me, that's a bullish development. Commodities, now you got counter current things going on. I think part of the reason why the dollar bounced a little bit on Friday and why gold bounced potentially is related to the fact that you got the Houthi rebels and the concerns about what's going on in the Red Sea with shipping. But you could see gold did come down on the day, ended up 0.5% up. Silver was down after a gap up 0.85. Oil continues to bounce around below the 200. Natural gas, nothing. And as we said, the rates were mostly flat on the week. Here's the 10-year, and on Friday it was up a teeny bit. If we look at the weekly market timing model, and this is looking at it weekly, you could see all of them, the spider, the Qs, the Russell, and the diamonds are above their moving average with green bongos. That counts as a buy. And a lot of people ask me, well, why don't I look at the daily? Because sometimes it flips too fast for me. But you could see we can go back to November for the most part on the daily to see the strength that we have. From a breadth perspective, we could see that the equal weighted spiders are outperforming the cap rated spiders. The equal weighted Qs are outperforming the cap weighted Qs. And that's great to see the broadening of the market. And that is my granddaughter. All right. And if we look at the hourly sectors, which to give me a sense of what's working the most in the market, this real estate, I can take that off. The one that really pops up to me is biotech. And again, we've been talking about biotech on my videos for quite some time. when it broke this trend line resistance. Biotech is being driven, I'm sure, by things like multiple takeouts that have occurred. We'll show you one that occurred on Friday as well. You also got a JP Morgan Healthcare Conference, and sometimes it runs up to that in January. There's a lot of strength in the market. I mean, the best might be biotech, but discretionary looks good, real estate looks good, technology has and continues to look good, industrials, financials, even materials coming up, which is probably related to U.S. Steel. If I go and I look at the scanners, let's start with the heat map. Here's the Russell 2000. I just want to contrast the Russell, which has a lot of green, with the S&P 500. And it's not to say the S&P 500 isn't positive, but much more strength in the Russell 2000. When I look at Wealth Scanner, I can rank the stocks by the algorithmic relative scanner derivative that we use in wealth charts. And you could see one thing that's different is we're not all above 850. In fact, we're not all above 800. So despite the fact that the indices have held up, we have softened in the market. Again, I think this is rotation. XME and there's another one here that's Steel SLX, probably driven by the U.S. Steel acquisition. But you've got some interesting things in here. Healthcare equipment, that's new. Russell growth, the Russell 2000 overall. So this truly is a market that's broadened out. Now, I wish I could show you 30 or 40 great stocks to go out and buy on Monday.
Sherry, Scott, or one other.
Sorry about that. My wife was calling to tell me that my granddaughter was on her way over. She's already gotten here. So, as I said, broadening out of the market, but I don't expect to find a lot of stocks that are good buy points because this market has run for quite some time. And, you know, when that percentage of stocks are above their midline, their Bollinger Bands, I would not expect pullbacks to be working. So if I go into this CAT scanner and I'm going to start.
Sherry, Scott, or one other.
And I'm going to start here. And let's go look at pullbacks and uptrends. And let's look at all symbols in the market. So a couple of things. The formatting here is cleaner than it was before, and I think we can thank Rob and Wealth Charts for doing that. They did some nice upgrades to the system. The first thing you notice is there's only four bullish dots, and then a handful with twos. There's nothing with threes, and that's looking at the entire market. Those dots have nothing to do with pullbacks and uptrends. They have to do with momentum. So I didn't see a lot of momentum at the end of the day on Friday. If I go and I look at just Momo up, only looking at dots, there's a little bit more. So not many pullbacks for obvious reasons. This market's been in running. Let's go through the top sum. ALTR, Altair Engineering. Now, they had a big upgrade to $86 on Friday. I'm not sure if that's what drove it. Beautiful breakout on volume, but it's extended now. How do I buy this now? You could see the high jump is at 100. ANSS had a beautiful move as well on takeover speculation. Well, hard for me to chase that one. I don't know DSKE. And when I see a stock that went from 482 to 810, and I don't see earnings coming in, you wonder if this isn't a takeover, or could there have been a split there? Well, 100% on high-low. I'm not chasing that without more. Karuna Therapeutics, I mentioned that you'd see something that was being bought, and this one was bought. Takeout price must be close to 330, which is no surprise. They usually don't trade at the takeout price until you get closer. But I believe that was Bristol Myers Squibb buying that, if I am right. But again, I don't play those types of things, so that's not helpful to me. RKLB, Rocket Labs. This one is probably in the healthcare space jump. That one looks actually interesting. I don't know much about it. I can see going back. Let's get on a weekly chart. Here we go. It's not, come back down to the bottom of its weekly range, took out the 200, had three dots, volume breakout, momentum, great relative strength and OBV. Not to the point where this thing is overbought. So this is one that I might want to look at. In fact, I think this one needs to get some attention. So I'm going to put that on my buy watch. And I'll keep going. SCRM, Screaming Eagle, it sounds like a SPAC. I don't trade those. I don't know what Celebrite DI does, but I do like the pattern. Uptrend, sideways, and a breakout. 2 days with good volume. Three dots, volume, breakout, momentum, relative strength, and OBV, and not extended. Looking at the weekly chart, this has been in a run. GREE, I believe this is a it's either solar or Bitcoin. I'm thinking it's Bitcoin. Um, it's one of the two. Maybe it's solar. But big volume, breakout momentum, not extended, relative strength, OBV look good. But this is bottom fishing, and I'm not a big fan of bottom fishing either. Think about what bottom fishing is after the rally we've had. This is rotating into stocks that are just destroyed. One that I do like is NBIX. This is not a takeover. This was up on some news, I believe. And this is a biotech play that has drugs on the market and a pipeline. It is probably still a takeover candidate. Speaking of biotechs that are takeover candidates, one of my favorites has remained Axosome. And you could see Axosome, which has come off of a pretty significant pullback down to 55. And on Friday had a big volume breakout, momentum signal, relative strength OBV look good, not extended. I wish I could show you lots of stocks that look attractive. I think this market is maybe not at the high, but we are going to have a correction. The question is, does the correction come this week? Does it come sometime around first quarter earnings? Santa Claus would say we should have a grinding higher week this coming week and first 2 days of January. But we are extended, and even though we eased some over the last week, we are still extended. So these are just some of the stocks that I'll be looking at. I do have a buy watch that I put together of my own personal favorites that I watch. To be honest, not a whole lot of things come up and hit me in the head and say you need to buy me. MAR is one I like a lot. I have a small position. I wish I had more. And this is definitely a Bitcoin derivative. And it looks like it's way up and extended. It is at 100, and I'd rather buy it on a pullback. But this is a stock that was 85 before. And some of the coal players, this is BTU. Looks like it's stirring here. CEIX is another one that I'll be looking at. IONS had a drug approval, I believe, after hours on Friday. This one might move. Biotechs are interesting. I love them, but biotechs are unlike every type of industry. Why? Biotechs move on quarterly earnings. Typically not much because they don't usually have earnings, the ones that I follow. Biotech move on news. Absolutely. A new drug approval, a positive study. They don't follow a calendar. You may not know they're coming. Biotechs move in front of major meetings. You got JP Morgan in January. You got cancer doctors in June, blood doctors and breast doctors in December. So you got to know all the pieces. But this one will go up on its approval, I suspect, this coming week. And then even Merck is one that is hard to believe. Think of this as a growth stocker. This is probably the leader in immune therapy for oncology, and it's definitely sold off of late. A breakout above the 200 to me might make that interesting. So these are some that I'll be watching. I hope you have a wonderful holiday season, a safe, happy, Merry Christmas and New Year's, and I'll see you next week. And sorry for the couple of periods where we got some extra noise that I didn't expect, with a granddaughter coming to say hi and my wife calling me belated to say my granddaughter's here. Take care, everybody.